Good morning, traders. Here's your market update for today. So, starting with the dollar index, the US dollar index hovered near 98.9 on Tuesday, trading sideways this week as the investors assess the effects of the ongoing government shutdown, trade uncertainty, and monetary policy outlook. National Economic Council director said the shutdown could end this week, lifting some hopes for resolution. And on trade, President Trump said he expects to reach a fair deal with Chinese President Xi in South Korea later this month. And meanwhile, the markets await Friday's September CPI report, whose release may be delayed by the shutdown. And the Fed is widely expected to cut rates by 25 basis points next week, with further easing possible in December and next year. And technically, the dollar's rebound has struggled to clear 99.08 and 99 mark, with sellers active near those levels. And the lack of momentum, combined with lower yields and political headwinds, point to short-term downside risk. And failure to hold above 99 could shift focus to the 25-day simple moving average near 98.2 and the psychological 98 area. And a break above 99.08 could reopen the path to 99.56, which is the 2-month high. Next, moving to WTI spot crude oil. The oil traded near 57.5 a barrel on Tuesday, which is its weakest level since early May, as oversupply fears and trade tensions pressured energy markets. The Brent's future curve now signals that traders see oversupply risk extending into 2026, with floating storage expected to rise and onshore tanks nearing capacity. This marks a bearish narrative not seen for years, with forecasts suggesting crude could slide towards $50 per barrel over the next few months. However, potential inventory builds in US could provide temporary support. And technically, oil remains in a 3-year downward trend, with October's slide accelerating as prices approach 55. The RSI is near oversold territory for the first time since April, hinting that the momentum is fading. And key support rests at 55.14 and 54.78. A break below could target 49, which is the lower boundary of the long-term channel. And resistance is at 58 and 58.08, followed by $60 if the recovery extends. Then spot gold. Gold plunged nearly 6% on Tuesday to around 40.86 per ounce, which is its sharpest one-day drop since 2013 after hitting a record high of 43.82 on Monday. The sell-off followed a stronger dollar, profit-taking, and reduced safe haven demand as US-China trade optimism improved. Presidents Trump and Xi are expected to meet next week to finalize a trade deal, while India's seasonal gold demand has faded. Despite the correction, gold remains up 55% year to date, supported by expectations of further Fed easing and ongoing safe haven demand. And from a technical view, Friday's bearish piercing pattern hinted at a short-term top, and support lies at 4100, then 40 and 59, which is the Pyra high turned support. A break below could target the 20-day SMA at 4002. And on the upside, if buyers regain control above 4200, gold could retest 4250 and 4300, and with the resistance at the 4391 record high. And last but not least, the Australian dollar. The Aussie dollar slipped to around 64.85 on Tuesday, ending a 2-day rally despite the optimism over the progress in the US and Australia trade deal. The two nations signaled a critical minerals partnership described by President Trump and Prime Minister Albanese as a key step to reduce reliance on China. The agreement allocates about a US 8.5 billion for mining and processing the projects. And domestically, investors await PMI figures and RBA speeches later this week. And technically, Australian dollar trades below 65.38 with a persistent bearish bias. The RSI below 45 supports downside momentum. And on the downside, 64.55 and 64.14 acts as a key support. A break below could extend losses to 63.72. And resistance sits at 65.38, followed by 65.72 and the top channel at 65.70. A breakout above would improve the short-term momentum towards the 66 cents level. So that wraps up today's morning review. Keep an eye on the CPI data, shutdown headlines, and OPEC supply trends because these are all the potential market movers this week. Trade safe, and I will see you in the next update.